Welcome back to another episode of Borak Bersama Maybank. We are here to wrap up the latest quarter of earnings and to give everyone some context on the latest results. So, just a bit of background, the results were largely in line with our research team's expectations. But to help break down the details of this latest quarter earnings or performance, we're joined once again by our Head of Malaysian Equities Research, Ms. Wong Chew Han. Welcome back to the show, Chew Han.
Thank you.
So as always, let's begin with an overview of the results. So around half of the earnings for the stocks under our coverage, they came in mostly in line, but majority of them actually were quite disappointing, coming in below expectations. So Chew Han, could you maybe share some insights into which sectors and stocks outperformed and underperformed, and also how have most of the recent results impacted our earnings outlook for the future?
Yeah, sure. So quarterly core earnings of our research universe continue on their year-on-year uptrend, and this is for the sixth sequential quarter. But this time round, it was at a slower pace. Consolidated core earnings were up 6.6% year-on-year in the third quarter, which brings 9 months growth to 15.5%. And this came from all sectors with the exception of the consumer sector. The heavy lifters were the banks, utilities, plantation, property, oil and gas, and aviation. During the quarter, we saw the aviation and gloves stocks returning to the black. Now, about half or 49% of the core earnings reported was in line, 32% fell short, and 19% beat our expectations. Gaming, gloves, petrochem, technology, and transport generally disappointed, and there were no sectors with earnings that positively surprised. Prominent negative outliers were Berjaya Food, Capital A, Al Salam REIT, Hatta Lega, SolarVest. However, on a positive note, the positive surprises came from large caps like Axiata, AMMB, and Genting Malaysia. As for how this impacts our earnings outlook, we now estimate 13% core earnings growth for our research universe this year, compared to our previous estimate, which was 14.5% growth. And for next year, we are now looking at 10.9% growth. Previously, we were looking at 11% growth. So this means that our universe core earnings estimate has been revised down by 1.7% for this year and 1.8% for next year. For next year, we expect almost all sectors to deliver year-on-year core earnings growth, with the exception of our port and logistics.
So with the lower expectations for 2024, I think we've also lowered our year-end KLCI target for 2024 as well. So right now it sits at 1,630. I understand that the financial year 2025 figure will be finalized in our upcoming 2025 Outlook and Lookouts report. However, at this current juncture, what are some of the factors that prompted the research team to revise the financial year 2024 target down?
Yep. So Trump 2.0, now that was actually not our base case. And we now expect higher volatility in global capital markets next year. This is due to renewed priorities as well as policy execution in the US. Upon taking into consideration this new landscape, we have lowered our this year year-end KLCI target to the level which you mentioned just now, which is at 1,630. This estimate is based on 15 times 12 months forward PR. And as you have mentioned, we are still finalizing our KLCI target for next year end, 2025. Externally, our macro research team expect a busy first 9 months next year, with key themes being the regulation, immigration, taxes, and tariffs. For Malaysia, mitigating some of the external risks under Trump 2.0 is the country's what we call investment upcycle. All right, this is amid realization of robust approved FDIs and DDIs that we have seen since last year, as well as initiatives under the Madani Economy Framework. Now, with that in mind, do look out for our upcoming 2025 Market Outlook Report for further details.
So for some stocks, particularly the ones from the construction space, we have seen a strong run-up leading into the third quarter results season. Has the team's most recent review led to any changes in our top buys list?
Yes, in fact, there have been some changes. Within the large cap space, we have added on Harta Lega as well as Genting Plantation to our top buy list. But while removing Sun Dhabi, Gamuda, KPJ, and EcoWorld. Now, this is the removal is mainly due to narrow upside to our target prices, but these stocks are still buy in our book. Meanwhile, in the mid-small cap circle, we have replaced ATAC, Aurelius Tech, with BS Industry. Replace Great Tech with Frontcan, as we have downgraded Great Tech to a hold during this reporting season, the recent reporting season. And lastly, we have also replaced Balestor with Bumi Armada.
Alright, thanks so much, Chew Han. To the audience, we will have the updated list of our top buys on the screen now. So if you want to check them out, do pause the video at this current timestamp. And with that said, that's all the time we have for today. Aside to the audience, if you want to find out more information about today's Borak topic, you can get more details from our latest Malaysia third quarter 2024 results roundup report on your Maybank Trade MY app. Just head on over to the Discover tab and you will be able to find it there. If you are new to the markets and have an interest in trading stocks, structured warrants, or even futures, you can approach our sales representatives at your nearest Maybank branch and they will be more than happy to get you started on that journey. So with that, we'll catch everyone in the next episode. But until then, this is Ben signing off.